The Federal Reserve will announce if they are changing interest rates. A rate hike can strengthen the dollar, while a rate cut can weaken it. The Eurogroup fears that the expansion of USDT and USDC could weaken the ECB's control over monetary policy, leading to considerations of tightening MICA regulations. But it will be difficult for the price of the S&P 500 to make a good recovery. Welcome to today's market analysis. I'm Isa Martinez, a trader and analyst at xChief, bringing you expert insights into the financial markets. In this session, we'll break down the technical levels for the US dollar index, S&P 500, Euro USD, and Bitcoin, alongside fundamental factors driving market sentiment. With inflation concerns, central bank policies, and geopolitical tensions shaping the landscape, it's crucial to stay ahead. Let's dive into the charts and identify potential trading opportunities. We will start with the economic calendar, and don't forget, all these hours that you are going to see are based on GMT-5. This week, the financial markets will be influenced by key economic data releases and monetary policy decisions. On Monday at 1:30 p.m., we have the core retail sales and retail sales reports. These indicators show how much consumers are spending. Higher numbers mean people are buying more, which can boost the economy and strengthen the US dollar. Lower numbers indicate weaker consumer spending, which can slow down economic growth. On Wednesday at 7 p.m., we have the federal funds rate decision, followed by the FOMC economic projections and FOMC statement. The Federal Reserve will announce if they are changing interest rates. A rate hike can strengthen the dollar, while a rate cut can weaken it. The FOMC statement provides insights into the Fed's view on the economy and future policy plans. Then at 7:30 p.m., the FOMC press conference will be held, where the Fed chairman will answer questions and any unexpected comments can create market volatility. On Thursday at 1:30 p.m., we have the unemployment claims report. This tracks the number of people filing for unemployment benefits. If claims rise, it suggests a weaker job market, which can negatively impact the economy. A lower number indicates job market strength, which can support the US dollar. And now we will talk about the most important fundamentals of the week. And we will start with gold, because gold briefly surpassed $3,000 per ounce on Friday, setting a new all-time high after weeks of consolidation. Despite expectations of profit-taking, sentiment remains bullish, with analysts like Macquarie forecasting a rise of $3,500 in the third quarter. The rally is driven by global economic uncertainty and trade tensions, particularly Trump's threat of a 200% tariff on Europe alcohol imports. Additionally, lower than expected US inflation supports expectations of Federal Reserve rate cuts, further boosting gold. From a technical perspective, gold maintains upward momentum with targets at $3,190 and $3,400. While some experts anticipate short-term consolidation, they note that gold is not yet overbought. At these price levels, a 400-ounce gold bar is now worth $1.2 million, reinforcing gold's role as a safe haven asset in times of uncertainty. On other news, Europe is accelerating the development of the digital euro to counter the growth of dollar-backed stablecoins and Trump's pro-crypto stance. The Eurogroup fears that the expansion of USDT and USDC could weaken the ECB's control over monetary policy, leading to considerations of tightening MICA regulations. While the European Union imposes more restrictions, the US is advancing a more crypto-friendly regulatory approach, with Trump promoting stablecoins and a national cryptocurrency reserve to strengthen the dollar. This contrast creates a hard fork in global regulation, with Europe pushing for a CBDC while the US supports stablecoins. However, most European citizens reject the digital euro due to concerns over privacy and financial control. further increasing interest in Bitcoin and other cryptocurrencies as an alternative. Now we will continue with the technical analysis of the most important assets that we always take into account for trading, and we will start with the DXY. The first thing you need to consider with this asset is that we have a downward structure. For now, we don't see a clear intention of the price to try to recover from this downward structure. So considering the technical aspect and the geopolitical tensions, it is highly possible for the US dollar to continue maintaining this downward structure. From now on, we can establish targets that maybe are related to the recovery of the price. The first target that I will consider is the 50% of this downward structure, which is located here at 105.309. Also, in this point of the price, you can see a clear fair value gap, which is with its consequent encroachment located at 105.432. So for this week, if you're trying to buy or you are trying to make longs with the DXY, try to consider this point of the price, because this will be the first target, the first bullish target before making a new downward movement. After this, we have other objectives. You can also establish other bullish objectives, but for me, it is difficult for the DXY to recover in the short term. So if you're trying to trade bullish movements, do not have high expectations about these movements. And if you're trying to make trades with a bearish movement, you could consider two targets for this week. The first one is located here at 103.221, and the other one, which is a low of the daily chart, is located here at 102.292. This week is important to consider fundamentals like the possible rate cuts that will happen on Wednesday, so consider that volatility can enter to the markets on this day. Now let's continue with the SP500, and as you can see, we have saw a strong downward movement last week. It's important to understand that the SP500 is highly affected because all the fundamentals that are related to Trump's movements and Trump's decisions. For now, a clear target for the bullish movement should be considering the 50% of this last range, which is located here at $5,826. After this, obviously, you can consider these highs that can be here at $5,986, or maybe a fair value gap, clear fair value gap that is located here with its consequent encroachment located at $6,069. But it will be difficult for the price of the SP500 to make a good recovery. As bearish targets, I will still consider this target that I have established last week, which was here at $5,402, and the last one located here at $5,118. If we maintain the geopolitical tensions and if liquidity does not enter to the US markets, it will be highly difficult for the price to recover. So I think this downward structure will continue. So take that into consideration. And for me, the next movement will be to try to make a lower low in this chart. Now let's continue with the Euro USD. This is an important asset that you always need to consider if you are trading Forex. And don't forget the first analysis we made with the DXY, which is directly related to this asset. As I told you before, if we don't see a recovery from the US dollar, it will be easy for the euro to maintain this upward strength. So obviously it will be easier to trade the Euro USD with longs. I will maintain the same bearish targets that were located at 1.04489, 1.05754, 1.06511, 1.07434, and I will add also these two, the first one located at 1.08051 and the last one here at 1.08226. And finally, the bullish targets are established considering the last highs. The first one located here at 1.094, and this last target, considering a hike in the daily chart, will be at 1.099. Let's finish with Bitcoin, and I just remind you that the last week we have established this target located here, $78,000, and after that it tried to make a new upward movement. However, after Friday, after the New Year session, we are seeing that there is no volatility in the price. If you are bullish with Bitcoin, I will maintain this target at $85,400, another clear target at $86,500. And after that, if we see a strong upward movement, try to understand that if we maintain the price above these targets, there is a possibility for Bitcoin to make a market structure shift, and with this we can change from a downward structure to an upward structure. However, if we are maintaining this downward structure, please consider these two last points of the price. The first one located at $79,890, and the last point, a crucial point of the price, located here, $76,555. If the price keeps falling from this last point that I have established to you, we have a fair value gap here with its consequent encroachment located at $72,500, which could be a strong target for the price of Bitcoin. That wraps up our analysis for today. The markets remain volatile, and staying informed is key to making sound trading decisions. If you found this analysis valuable, make sure to like this video, subscribe to the channel, and hit the notification bell so you don't miss future updates. Also, if you are looking for a trusted platform to trade, register now at xChief.com and take your trading to the next level. See you in the next session.